This is my best trading week I've had for a very long time. I bought and I kept on buying. All the trades I took, I sent them out for free. My free Telegram community where I send out signals. Link is in my description. Now take a look at my screen right here. You can see the charts. This trade buy, in fact, I've been buying right from on Tuesday straight till Friday. Yes. Now I'm going to give you the analysis of every single trade I took right here. The analysis of every single trade. Now this video might be a very long one. I don't know how long it's going to be, but it's going to be as long as possible for you to understand whatever I took this week so that you can actually spot same trade and take it, right? So let's dive right straight into the video. Let me not waste any much time. Now, looking at all this chart right here, you might be wondering, why was I buying and buying and buying? There were some sell opportunities like this one. I was selling to the downside. Why didn't I sell? Why was I buying throughout the week? Now, it all does down to your higher time frame analysis, right? You need to start from the higher time frame. I don't know, some mentors say use the 15 minutes, use 5 minutes, use 1 minute. Yes, those are good, but then you need the higher time frame. It is very important. Imagine you know the direction of the higher time frame. You know that the higher time frame is going to buy to a certain point. Then you switch to a lower time frame and then you start buying from that lower time frame, be targeting the higher time frame point of interest. You can see it makes so much sense. Now let me break it down for you. First of all, we have to switch to the 4 hours time frame, right? You can see, let me set this up real quick. Now, what happened in the 4 hours time frame? What can we see right here on the 4 hours time frame? Looking at this, I'm not going to analyze all of this part. I'm just going to start from here because this was where the move started from, right? This was where the move started from on the 4 hours time frame. Now, looking at this right here, you can see that we had a market structure shift to the upside. And what is a market structure shift? A market structure shift is a sign that price has changed trend. Price has reversed in trend. If price was bearish before, now price is bullish. If price was bullish, now price is bearish. That's what a market structure shift means. It means, but for this case, we've shifted from what? From bearish market to bullish markets, which means you should be looking for a buy. Now, the thing about this 4 hours time frame is you need to be patient for the setup to play out. It's not just going to play out immediately like you're trading in the 15 minutes time frame. No, it's going to take a lot of time. Now, when this market structure shift happened, you price left liquidity below here, engineered liquidity, right? Price left some liquidity below this level. Now, there's one thing you need to do when you're trading. You need liquidity to be set first before you actually wait for price to tap into your point of interest. It is very important, right? For instance, you want to buy, your order block is below and price is coming into your order block. You want price to first leave liquidity below first. Leave liquidity above your order block so that price is going to fake out some traders that are early buying, that are buying very early. That's what happened right here. As you can see, this price was coming down right here to this point of interest, right? Because when you're trading a continuation, right, after price has shifted structure to bullish, you want to trade continuation because you are expecting the trend to continue in bullish markets, right? You don't want to be trading reversals because price has already given you a market structure shift that is going to be going to the upside. So you don't need to be trading reversals, you need to be trading continuation. You understand? Now, we've seen a market structure shift, so we are now trading continuation. Now that we're trading continuation, you want to be trying to get your trades from the breaker block, right? This is why you need to be very smart about some ICT concept. You need to be well informed about some ICT concept before you can, proceed with a strategy like this. Now, we got our market structure shift. Our point of interest is this breaker block because we are trying to trade continuation. Price was coming down. You can see that early buyers were buying already, trying to target highs, whereas price is creating what? Engineer liquidity right here, which is very important. Now, price took out this engineer liquidity and tapped into our point of interest. One thing you should not do is, when price has gotten into your point of interest, you do not buy immediately because you do not know if that point of interest is going to hold or not. You are not God. You are not the king of Forex. You are not the market maker. Your daddy does not own the market, right? You understand? Now, when price comes into your point of interest, you wait for a lower time frame market structure shift. You wait for a market structure shift to form in a lower time frame. Now, when that market structure shift forms in your lower time frame, that is a sign that your point of interest is actually causing the market to reverse in trend. Because now that we are bullish on the 4 hours, is as price is approaching our point of interest, we are bearish. Do you understand? You're on the 4 hours. Your 4 hours has given you a market structure shift, and you have a point of interest below. As price is approaching your point of interest in the lower time frame, let's say in the 15 minutes, you are going to be bearish. You are not going to be bullish. I don't know if you understand what I'm trying to say. Now, as we are bearish right now, because price has tapped into your 4 hours point of interest, you do not buy immediately. You wait for market structure shift on the lower time frame. That was what I did. Now, let's continue right here. Now, After I spotted my point of interest on the 4 hours, I wait for price to tap into that 4 hours point of interest. I already mark where I'm expecting price to get to. Why do I mark where I'm expecting price to get to? Because as far as price has shifted structure on the lower time frame as it tapped into my point of interest, we are going to be buying until price gets to the 4 hours target. And this right here is our 4 hours target. We are going to be buying till price gets here, because we trust in our analysis. We already know when price tapping here is going to come to our point of interest. Some people use here as their target, but I personally use this point as my target. There's a reason why, right? But I don't really have time to explain that on this video right here. So when price got into here, I already expected price to come here. You can see that when price finally got to this level that I marked as my target, you can see the big reaction, the push to the downside. The big push to the downside, which means if price is meant to disrespect this level and start going down, we would have been safe, because we would have actually, we know that our strategy actually told us to price is going to get here, and price actually got there. You can see that, right? But price decided to break this level and continue going higher. You understand? That's to show you that our analysis was actually correct. Now let's switch to the lower time frame so I can show you what I was seeing that made me took all the buys I took, right? So this is actually the important part. This is what you should be waiting for. You understand? Now we switch to the 15 minutes time frame. This is where all the magic happened. And mind you, all the trades I took, I sent them out. You won't believe, all the trades I took, I sent them out for free. Absolutely free, on my free Telegram community where I send out signals. Link is in my description. Click the link and join my free Telegram community. Now, you can see this right here. You can see this is actually the first trade that I took. Let's make this better viewing, right? Let's expand this. So this is my point of interest on the 4 hours time frame. You can see what happened when price tapped into my point of interest. Price rejected it, but overall price didn't want to change structure just yet. Price doesn't want to shift to bullish just yet. That's why I was saying that as price is approaching your point of interest, your higher time frame point of interest, in this case, price is bearish. You can see price creating lower low, lower high, lower low. So we are still bearish. We want to wait for price to shift structure to bullish before we start buying. You understand? So now when price tapped into my point of interest, I saw what? At the ending right here, I saw price create a high, a low. Price broke this high, creating what? A market structure shift. So now we know that that point of interest on the 4 hours has caused a market structure shift, right? That means the downward movement has ended. Price is not going to be bullish right now. So after this market structure shift, I let liquidity formed, right? I let liquidity to be formed. You can see this liquidity right here, liquidity being formed right here. And then I wait for price to tap into my point of interest. Your point of interest for the buy trade, liquidity must be above your point of interest. And this is it. This is my point of interest. This is liquidity above my point of interest. Immediately price tap into this level, I sent out the signal for free. That's it on your screen right there. You can see I sent out that signal for free. And this is the result after it finally hits take profits. You can see we are being sincere and transparent right here. So this was how I took the first trade. Price tapped into what? The point of interest, caused the market structure, left liquidity here. Price tapped into the point of interest right here. And then we took our buy. And price took some time before it actually hit our TP, because this is actually kind of a swing trade, because it's a 4 hour setup. Now, after then, I didn't really bother myself to switch to a higher time frame anymore. I didn't bother myself to switch to a higher time frame. I was just on the 15 minutes time frame, because price is in my point of interest and is reacting to my point of interest, and price hasn't gotten to the level I expected to go on the 4 hours time frame. So we saw a lot of opportunities to buy around this level. You understand? Now, how was I able to take this second trade right here? Quite easy. The same setup all through. Now, this was the high that price left before price came down to tap into my point of interest. As you can see, price came here, gave us what? A break of structure. It gave us a break of structure. Now price started forming another liquidity right here. And then this second trade point of interest was gotten from the 4 hours. It's a 4 hours order block. If I switch to the 1 hour order block, if I switch to the 1 hour, you see what I'm talking about. So this is it. This is the second trade I took right here. This is the second trade I'm trading. And now this is the last bearish candle before this push to the upside. So this is the 1 hour order block. So I marked that out as my point of interest, right? So for me, it is a point of interest. I don't know how to explain it to you why I'm marking that level, but I'm trying to make it make sense for you as another block. Maybe you are an ICT trader or an SMC trader, you understand? For me, I call it a point of interest. I don't actually, most of it is, I don't really mark break of structure and all of this on my chart. It's because I'm trying to teach you guys so you guys can understand better. That's why. So let's go back to the 15. Let's go back to the 15. Now, I already know price wants to come here. Then you can see liquidity forming right here. Liquidity is forming right here. Engineer liquidity. You can see the same thing. Engineer liquidity must be what? Either is an engineer liquidity or a properly formed liquidity. It must be above your entry for a buy. Now, this is my point of interest. Price left this liquidity, came here, tap into this level, and that was how we're able to take this buy straight to the upside again. The same thing happened right here. Right, but this setup was taken from the 1 minute time frame. Now, the same thing happened again right here. The same setup throughout the entire week. The same setup. Now, you can see we had a break of structure right here. What? We had a break of structure. Price traded up, give us a high, retrace down here again, and give us another break of structure. Right? So what do we have right here? We have what? Liquidity forming liquidity. And you can see when price was coming down, price respected this liquidity. You can see this low right here. Price came here, tap here, and pushed up. Price coming below this point again, he respected this level. So I suspected this level to be a form of liquidity, and price wants to take out a point of interest below this point. Now, this is my point of interest right here. I don't have any way to explain to you, but I think it's kind of I don't know what they call it, MNSR, sorry, Malaysian support and resistance, something like that. It's a kind of a point of interest I got from that point, right? This is actually a support, right? A clear support. I don't know how the MNSR traders actually traded, but it's actually worked for me as a point of interest, right? Apart from that, there are other levels that there are other things that make me take this point as my point of interest. So price from liquidity right here, tap into this level, and now this is my target. Price gave me what? TP, CPI push price to the upside, TP right here. Now, the fact that price failed to break this level, because this is a high, this is a low, price should have broken this level and give me a break of structure. Because a lot of users are going to call this a break of structure, price closing here as a break of structure, but no, this is what I'm trying to say. A lot of traders are going to call this a break of structure, but for me that is not a break of structure. That's how I trade, not a break. I need two candles closing above a particular structure for me to call it a break of structure. So price did not break structure for me there, but price eventually broke structure at the end of the day for me over here, right? So when price failed to break this level, I called this move from here, this entry from here, and then you can see price coming down here again, liquidity, right? Because price fail, we know we are bullish. We know that from the 4 hours time frame. So we should be focusing on buys and not sales, right? So this is liquidity. Price coming down here respected this liquidity again. So I was like, okay, which point of interest is below this level right here? Which point of interest is below here? That's why I saw this same setup right here. You can see the same setup that made me take a buy from here is the same setup that made me take another buy from here. And I sent out the signal again. It's very funny. I sent out the signal, and the trade, you can see the trade on your screen. This trade right here and this other trade, you can see the trade on your screen. I took them, right? So that was it. Some people might be saying, oh, you took a buy from here, you would have hit stop loss and then take this other buy. No, look at your screen right here. You can see the first trade, the TP, second trade, the TP. I took all these trades I'm showing you right now. The same thing, you can see liquidity from here. Price came below this liquidity. This is my point of interest. Tap into my point of interest and then TP. Now, the thing is, I always wait for a market shift, maybe sometimes on the 1 minute time frame as well. Because like I said, when you have a point of interest, when price has created liquidity and tap into your point of interest, you don't just buy immediately. You wait for a lower time frame market structural shift. So even after getting all these 15 minutes point of interest, right, you can still wait for a 1 minute market structural shift again and enter from the 1 minute. You understand? My students are going to understand. Those that I mentored, they understand what I'm trying to talk about right now. You might not understand because you're not a student. If you're interested, join my free Telegram community. You can contact me from there. So that's how I was able to take this buy again to the upside. Right? This trade, personally, I missed out on this trade, but you can see break of structure, price creating liquidity right here, and then point of interest, price coming down to tap my... All this is even liquidity. All this move right here, liquidity. So price came down to the same level, the same entry method again. The same point of interest. Tap in here, push all the way to the upside. So the last trade right here, I sent this out on a Friday morning around 7 a.m. You can see it on my screen again. I sent out this trade. You can see. Now, this is a low probability order block. That's how I want to explain it to you, because that's the only way I'm going to be able to explain to you that that's the reason why I took this trade. Because some people might be like, why is this your point of interest? What made you take this as a point of interest? But the only way I can explain to you is this is a low probability order block, right? So after price displays to the upside, you can see liquidity, engineer liquidity forming right here. Engineer liquidity forming. Price came here, although I did not wait for a shift in the lower time frame before I took this one. I just took it immediately and I sent out the signal on my free Telegram community. You can see on your screen. Then you can see what price did. Price shifted on the 1 minute and then came back down to tap into a particular point of interest before coming up. and we made money throughout this entire week. Now let me switch to the 1 minute time frame so I can show you the shift right here so you can see what I'm talking about. This is the only one I'm going to show you in the 1 minute time frame. So all right. This is not trying to get better, but let's just look at let's just look at it like this, because this is the best way I can. I need I need to hit it show very well. Now price tap into that point of interest of the 15 minutes, right? Created a double bottom, and then you can see liquidity right here. Price created liquidity right here, broke structure to the upside. It came down again, respecting this liquidity. You can see price respected this liquidity again. Price created liquidity, tested this liquidity again, respected it again before pushing down into a point of interest, another block right here at the bottom. Remember, that's what I said. No liquidity, no trade. If you don't have liquidity, don't take a trade. But although I did not take it based on this 1 minute trade. I took it based on the 15 minutes price travel to my point of view, and I took the buy. I was risking 51 pips right here to make 280 pips, 1:5.6 setup. And a lot of students passed their accounts. We can see screenshots. A lot of students made a lot of money. And yeah, that's just it. So that's how I was able to take this round. That's why I'm saying this is my best week trading Forex this year. My best week so far. I made a lot of money, right? So if you're interested in trading with me for free, click the link in my description, join my free Telegram community. If you're interested in learning how to trade Forex, like the way I trade, you like the way I trade, you want to learn to trade the way I trade, click the link, contact me, and I'm going to be very, very glad to attend to you. And yeah, this result could be yours if only you put in the work and backtest properly. Some people don't even know how to backtest till now. I'm going to teach you how to backtest properly. Right? So that's just, if you're interested, just let me know, send me a DM, and yeah, it's going to be all peace. And I'm going to see you guys next week, and I'm going to be making the same review video, the same analysis video of all the trades I take next week. Hopefully we'll see any setup next week. So I'm going to see you guys around. Peace. All right.